So, what is trading? For a lot of us, that word can sound pretty intimidating, right? But today, we're going to cut through all the noise and the complicated jargon to get to the surprisingly simple idea at the heart of it all. So, let's get into it.
When you hear the word trading, what's the first thing that pops into your head? Is it something like this? A dizzying blur of complicated charts, people making huge money in a split second, and just a lot of stress staring at screens. It's the classic picture, and honestly, it's one that can make it all feel pretty out of reach.
But what if we just strip all of that away? What are we really left with? Well, the reality is much, much simpler. Trading is, at its core, just the activity of buying and selling financial instruments. We're talking things like stocks or currencies, with the goal of making a profit from their price changes. That's it. No magic formula, no secret code, just that one basic action.
So let's really dig into that fundamental concept, because hiding behind all the complexity of the market is an idea that's actually super simple.
Buy low, sell high. We've all heard that, and it's a principle we all kind of get, right? The whole point is to buy something when the price is down and then sell it after its value has gone up. In financial trading, the only real difference is that we're not dealing with physical things, but with financial assets like stocks.
Here's a great way to think about it. Imagine you buy a concert ticket for 10 euros. Then, a week before the show, the band just blows up online. They go viral. Suddenly, demand goes through the roof. Now, your little ticket is worth 15 euros, and you can sell it and make a nice profit, all because you saw, or just got lucky with, that sudden shift in demand.
And that, believe it or not, is the essence of trading. Just like with that concert ticket, traders are trying to anticipate these shifts in supply and demand. They're looking to buy when they think an asset is undervalued and sell when they think it's overvalued. The basic principle, it's exactly the same.
Now, this brings us to one of the most important distinctions you need to know. People often throw around the words trader and investor like they mean the same thing. But they really don't. They represent two totally different ways of thinking.
And this slide really breaks it down perfectly. Over on the right, you've got the investor. Think of them as planting a seed and waiting for a tree to grow. They're in it for the long haul, focused on a company's growth over months or, more likely, years. But then look to the left, the trader. They're using a magnifying glass, not a watering can. They're zeroed in on those short-term price movements, working on a timeline of minutes, days, or maybe a few weeks.
So this brings us to a really crucial point. Because of that speed and that intense focus on price changes, a lot of people think trading is basically just a high-tech form of gambling. And that, right there, is a really dangerous misunderstanding.
Let's just ask it directly, because it's the question on everyone's mind. Are traders just getting lucky? Are they simply rolling the dice and hoping for the best?
And the answer is a hard no. Successful trading isn't built on luck. It is a serious activity that absolutely demands a solid foundation of knowledge. That means you've got to study to understand why the markets move the way they do. It means you need a method, a clear plan for when you're going to buy and when you're going to sell. And maybe most important of all, it demands that you are constantly, and I mean constantly, aware of the risk in every single trade you make.
So if there's one thing you walk away with today, let it be this. Trading is not gambling. It's not a game of chance. It is a serious discipline. And just like any other discipline, success has very little to do with luck. It's all about preparation, having a clear strategy, and having a deep, deep respect for the risks involved.